Now, from slumping sentiment to soaring share prices, gold miners are back in the spotlight. After months of investor hesitation, March has brought a surge of interest in gold mining funds, driven by record high gold prices and a rebound in miner profitability. Now, with some of the biggest names in the business, from Barrick to Anglo Gold, announcing buybacks and dividends, are we entering a new golden era for gold equities? Well, joining me to unpack the momentum behind the miners and what this means for investors is market analyst and gold bull, Peter Schiff. Peter, thanks very much indeed for talking to us.
Well, thanks for having me on.
So, Peter, gold has broken through the $3,000 mark, and miners are finally seeing some love from investors. What's changed in the past few months to shift sentiment back towards gold equities?
Well, you mentioned that gold miners are in the spotlight. I would disagree that they're not in the spotlight. I mean, that they're barely in anybody's light. That's the problem. Gold's over $3,000 an ounce and headed much higher. You would assume that there'd be a huge spotlight on these gold mining stocks, but they're in the darkness. That's why they're still so cheap, because the investing public does not understand this rally. They don't believe in this rally, and so they're not betting on it. I think that will change, but I think gold stocks will be much higher in price before that happens. But the smarter money has been buying them, already owns them, and is buying more. And that's what I would suggest that people do. Just looking, just as I'm about to talk to you, that copper is also at an all-time record high today. So it's not just precious metals, it's industrial metals. Copper's up 30% this year. I mean, they're talking about we got inflation licked. Copper's up 30%, and it's not even the end of the first quarter. I mean, these guys are delirious if they don't see that there's a huge inflation problem.
That copper story was quite interesting. I want to chat to you about that. But let's just quickly look at what happened last year. We saw miners struggle with inflation, labor, fuel, regulatory friction. I'm just wondering, have these pressures eased, or is it just, like you said, the market's simply betting gold prices are now going to hit high enough to absorb them?
Yeah, well, what was happening over last year and other years was the gold mining companies were suffering the negative consequences of inflation, which was a rise in the cost of mining. But now they're going to get the benefit, which is going to be a big increase in the price of gold. So the stuff that they're mining is now going to go up much more than the input cost of mining it. And so the profits that the industry is about to reap are going to be mind-boggling. And, at least for that industry, I mean, it's still a small industry. And Wall Street analysts have not penciled in any of these earnings. So people should just be buying. I mean, just as fast as you can. The only reason I'm not buying more today is because I'm already loaded up. But if I didn't have such a big position, I'd be buying. And so people should do that. That's why, we've got our gold fund. We had record outflows out of our gold fund in the last quarter of 2024, right? The public was dumping their gold stocks just before this explosive move up. Gold stocks are the best performing stocks year to date, yet the public was unloading them. Gold stocks went into a bear market in a few weeks after Trump won the election. Gold stocks crashed like 25-30%. Now they've recovered all those losses, but now they're barely above where they were before Trump won, even though the price of gold is hundreds of dollars higher now than it was when Trump was elected. So they're super cheap. The faster you can buy them, the better.
While gold's in the headlines, you mentioned something very interesting. Copper has quietly surged into near record levels, partly driven by these tariff fears and then a rush to ship metal in the U.S. How do you see the rising trade tensions and protectionist policies shaping the future of something like copper?
Well, again, I don't even think gold's in the headlines either. I mean, it's making new highs. It should be in the headlines, but it's not really being discussed. Copper's probably being talked about more than gold, because from most people's perspective, copper is more significant because they think gold is worthless, but copper they look at. But look, the increasing trade tensions, another bullish factor, I think, for these prices, because I think the trade tensions are going to result in a weaker dollar, not a stronger dollar, which was the conventional wisdom before Trump won. I think the tariffs are going to backfire, and we're going to have a weaker dollar. And that is going to lead to higher commodity prices. And I think that as the dollar weakens, you're going to see enhanced consumption in the emerging markets. And I think the emerging markets are going to start consuming a lot more copper and a lot more everything. Americans are going to consume less copper because it's going to be a lot more expensive. But that means that we're going to construct less. If we're going to consume less copper, it's because we're making fewer things that would have copper in it. Because most Americans just don't go to the store and buy some copper. But they buy things like cars or houses that have a lot of copper in them. And so we're not going to be building as many houses. We're not going to be making as many cars if we don't have the copper.
Yeah. Peter, as we wrap up, I mean, you touched on this earlier. For the everyday investor who missed the early rally, presumably you have a strong position on this. Is it too late to get into the gold mining stock now, or are we still in the early innings of a long-term bull cycle? What's your take?
No, I mean, that's my point. I mean, the prices are still so cheap. It's like you're buying gold stocks as if the price of gold was still $1,500 an ounce. It's $3,000. And it's even cheaper to buy silver. Silver's not even $34 an ounce. So silver's still well below its all-time high, even though gold is right at its all-time high. But both metals are going to go a lot higher. And the mining stocks have barely factored any of that in. In fact, they haven't factored any of that in. Their price for gold coming down. Wall Street analysts, when they forecast gold mining profits 2, 3, 4 years from now, they're doing it based on an expectation that the price of gold is lower than it is today, not higher. They don't even think it's going to stay the same. So I think those analysts are completely wrong, and they've completely, misvalued these companies. And that there's the opportunity, right? It's not an efficient market because you have a bunch of fools who are analysts who have no idea what they're talking about.
Oh, wow. We'll leave it there. Peter Schiff, thanks as always. It's a pleasure speaking to you.
Yeah, thank you.